Hannah Bernard. You're watching Market 1 Minute, and I'm here today with Rick Rule of Sprout Global. Rick, thank you so much for being with us. So to start off, let's talk about the VanEck Vectors Junior Gold Miners ETF. Where is it going? What are the long-term implications?
Fascinating topic. The Junior Gold Miners ETF is the most exciting ETF product launch I've ever seen. It's so exciting that the ETF itself is driving the sector rather than being driven by the sector. I've never seen this in my career. And it's important to note then that the whole sector is being distorted. Companies that are in the index have higher share prices, more flow of funds, and a lower cost of funds. The technique, I think, for making money associated with this is to find the companies that are not in the sector, that are orphans, and figure out which ones are strategic acquisition candidates from the ones that are in the sector. I think this will be the driving investment theme in the junior gold sector for the next 18 months.
Let's talk about uranium, the uranium trade. Tell us what investors should know right now.
A great topic. You know, the uranium trade was one of the most profound, pleasant events of my life the last time through. And we're shaping up, I think, for a replay, but it's going to take some patience for investors. In the first instance, the near-term outlook for uranium is bad. The uranium price will not firm until you see Japanese reactor restarts. And until that happens, people will pay attention to other trades to their detriment. The truth is that you can't make the stuff for $50 a pound and sell it for $20 a pound. The price has to go higher, and when the price goes higher, the stocks will perform the same way they did the last decade, which is to say extravagantly.
Rick, let's talk about the battery metal sector. What is going on with it right now?
Let's start with lithium. The truth is that the world isn't short of lithium. Demand is exploding very, very rapidly, and what we're short of is processing capabilities, but the market will take care of itself with regards to that. We don't need to find more, we need to process what we already have. On the other hand, however, we find cobalt to be an extremely attractive commodity. Unfortunately, the places that cobalt is easy to produce, that is Russia and Congo, are unpleasant countries. So we will have political challenges with regards to cobalt. But we think cobalt is one of those rare materials where even if the price goes up, if you can produce more, demand will grow steadily.
So let's talk again, always something that's a topic for investors, bull market. Where are we at? Do you think that you see one in the near future?
I think it's important to note that we're in a bull market. Your viewers will feel very differently now than they felt in 2015. That's the mark of a bull market. The truth is that we're in two bull markets. We're in a precious metals bull market, and I think there we're in the third inning of a 9-inning game. We are in the first inning of a broader natural resources-based bull market, but we're in a bull market now. The truth is that your viewers have to be patient. This is a capital-intensive, cyclical game. It could take 2 years to play out, it could take 3 years to play out. The important thing to note is that we're already in that bull market.
Always such great insight. Thank you so much for being with us, Rick.
Pleasure.